Vaibhav. In today's session of Visual JForex, I will be explaining to you the use of indicator named Heikin Ashi lines. This is an indicator classified under the other blocks of the various indicators. So far, we have seen these indicators: Bill Williams, moving averages, mathematical momentum, oscillators. Now it's the turn of the indicators classified under other section. Last week we saw till Don King channel, and now today it's the turn of Heikin Ashi lines. Heikin Ashi, uh, we are going to use the Heikin Ashi lines, not Heikin Ashi. Heikin Ashi line simply means the average bar in Japanese, and if you want to know how it is calculated, I have also included this formula for calculation of this Heikin Ashi lines, and the closing price is simply the average price. We take into consideration the open price, high price, low price, and the closing price, and we add it and then divide it by 4, and that is the closing price for the Heikin Ashi candlestick. And the open price is simply the median price of the prior candle. We take the open price of the previous bar and add the closing value of the previous bar and then divide it by 2. And coming to the high price is the maximum of the highest, the open price or the closing price, all three calculated as per the Heikin Ashi method. And the lowest price is also the minimum of the low price, open price, or the closed price, and these also values are calculated as per the Heikin Ashi method. Now we will add the Heikin Ashi line indicator to this Visual JForex board developed by the Dukascopy Bank SA, and it makes life a lot easier for us as we can rely on the algorithm developed using this platform to trade on our behalf day in day out, 24 hours for 5 days a week. And this is the indicator block for the Heikin Ashi. I am using the on candle as the start point to iterate the algorithm, and in this block you can see that we have to define only three input parameters, which are considerably less compared to the other indicators which we have seen so far. But for the output we are getting the four output values, and this can be used to define the various conditions, which we are going to see how we can optimize these conditions to see what is the underlying trend for any instrument, whether it is up move, whether it is down move. We can gauge the sentiments using these Heikin Ashi line. I have plotted these Heikin Ashi lines on the hourly chart for the Euro USD, and as you can see on the chart, I think I will need to increase the width of this output so that these are more easily visible. Okay, so I have increased the width of this line. I hope now these are better to see, where and visibility is much better. Now coming to its use, we can use these Heikin-Ashi lines to see what is the price move, on which side the price move is happening, and what is the underlying momentum. And one benefit or one advantage over the simple candlestick pattern is that sometimes when you see that big move has happened, and then for an hour or two, for a couple of hours, we might see the retracement kind of move. But even during such times, we don't really see change in the direction of the Heikin-Ashi lines. More or less, if we consider the all four lines, we see that the value continues to move in the direction of the strong trend. Now here, the downward spiral is fairly strong, and as you can see, these four lines, even if the two lines take the turn on the higher side, we have other two lines which are continuing to fall, and then in due course of time the price action again moves on the lower side. So if we use these four lines in unison with each another, we get a fairly good idea of on of the direction of the price move, and we can utilize this data to trade as per the trend, and also that gives us an advantage as we are not going to take any trade in the contrary to the underlying trend, and even when the price is a bit choppy, we can define the conditions using these lines, where we can set the conditions to trade only when there is significant move, and the difference between the prior values and the current values for Heikin Ashi lines has moved significantly. So even during the choppy times, we can avoid trading. And a simple use is that we see whenever the trend change happens. Suppose if the prior move was on the upside, and then after due move on the higher side, in due course of time, whenever the price reversal happens, and then these lines, all four lines starts to move on the lower side compared to the prior value, we can set the condition for the initiation of the sell trade. And whenever we see that after due consolidation the price has now broken on the upper side, we can set the trading conditions to initiate the buy trade. So you can utilize these Heikin Ashi lines to see what is the trend, on which side the trend is strong, and then trade accordingly. So to that extent, these lines are fairly useful, and as I have said, even to minimize the trade positions during the choppy trading scenarios, we can set the conditions simply by taking into consideration the price moves and the values, the absolute values, or even in percentage terms. We can set the conditions using the if blocks to rule out the trading whenever there is not much of a momentum and the price action is rather choppy. So here let's go back to the Visual JForex board, and let us try to define these Heikin-Ashi block to get the appropriate output values to define the conditions for the initiation of the trade. Default instrument, as I have said in the prior sessions also, and I would like to reiterate it, that your instruments choice is only constrained by the platform's ability to support it. So most of these indicators which are listed here, most of the instruments are supported. There is one way I think even you can overcome the shortcoming regarding the CFD. CFD instruments are not really supported as of now. So you have to define the CFD instruments condition just the way the requirements are as per the characteristics of the CFD instrument, but take any currency pair in place of the CFD in the start value, and then export it, and while running it on the JForex platform, again you change the instrument. You can do that, and that way you can work around this limitation also. In today's session, we will keep the start value Euro USD as it is, so we are not really making any changes there. Coming to the time period of the candlestick here, whether you want to trade on the shorter time horizon or on the longer time horizon is going to be the defining factor while deciding the appropriate duration for the candlestick. If you want to trade on the longer time horizon, then I think the 4 hourly or daily time frame will be more appropriate. For example, in today's session we will use the 4 hourly time frame for the calculation of these Heikin Ashi lines. Shift is the look back period. If you want to take into consideration the current value, then the shift should be set at 0. If you want to go back in time, then the shift has to be appropriately defined. Say for example, if you want to go back in time by 5 candlesticks, then the look back period should be 5, and we will be retrieving the data which was the output value 5 candlesticks periods back. So that's how the system works. For example, you can change the value as per your requirement. Let us take it as 5. Now Depending on these input parameters, we get this output value. The HA, Heikin Ashi open value, Heikin Ashi close value, Heikin Ashi high value, and Heikin Ashi low value. And by joining these dots, we get the Heikin Ashi lines. And as I have said, if the lines are rising, if the values are going up, that means the underlying instrument is in the uptrend and the price move is fairly strong. And during such times, we should be looking for the buy trades. If the values are falling, if the Heikin Ashi lines are moving on the lower side, then that means the underlying instrument is in the sell trajectory, and we better go for the short sell trades. So that's how the system works. And coming to the settings, as I have said many a times, we have to see on which side of this bid or ask want our calculation to be done, and there will be minor difference in the output value depending on the offer price, whether it is on the bid side or on the ask side. And the applied price doesn't really make the difference for this Heikin Ashi indicator, as was the case for other indicators. And that's mainly because we have to rely on this calculation which are custom made for the Heikin Ashi, and because of that the applied price is not much of a concern in the calculation of output values for the Heikin Ashi indicator. So this is the Heikin Ashi indicator, and as I have tried to explain, you can utilize this indicator to define and design the algorithmic setup which will help you find the trades in the direction of the trend, and you can trade with more confidence as you are trading with the trend and not much lag is also there. So as and when the price action moves strongly in any direction, the Heikin Ashi lines will follow suit, and that gives you an advantage as you can get uh, get involved in the direction of the trend early on. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I will be more than happy to take the discussion forward. See you tomorrow. Goodbye.